The revelation I'm about to tell you just shows how Scrooge-like and miserly the banks have become when deciding whether to lend money in the wake of the Hayne Royal Commission. One of the big four banks asked a young couple to commit to stopping their IVF treatments before they could get a modest home loan. So listen to this. A home loan assessor for one of the big four actually advised the couple's mortgage broker, and they put it in writing, that if they were to be eligible for the $600,000 mortgage they were looking for, then they had to confirm that there would be no additional costly IVF treatments. It is extraordinary that an Australian bank have asked a young couple to either give up on their dream of having a baby or give up on their dream of owning their own home. And I know this happened because the Treasurer, Josh Frydenberg, was in Queensland this week, where a local MP introduced him to the mortgage broker involved, and he passed on all the documentation. After significant pushback from the couple's mortgage broker, the bank eventually withdrew this unfair condition on getting a home loan, and the couple were able to get one. This is what Josh Frydenberg says about it. He says this is an unfortunate and extreme example of where bank customers are being asked to justify expenses of a truly personal nature. He says not only can this unnecessarily contain the flow of credit, but it also appears to be highly inappropriate. Now, Josh is often diplomatic, and in this case, he told me that it was one of the big four banks, but he would not say just which one at the minute. Now, the reason he's speaking about this, and the reason Scott Morrison is as well, is because the federal government is so concerned that in the wake of the Royal Commission into the banking sector, the flow of credit is really slowing down. Frydenberg and Morrison have had urgent conversations about how this is impacting on the economy, and it is. These are the official RBA figures. RBA credit data shows that annual housing credit is now growing at its slowest pace in the 42-year history of the series at just 3.3%. In particular, lending to housing investors grew just 0.3%. 0.3%, it barely grew at all in the year to July 2019. And again, this is the slowest pace on record. And the data overall for credit lending, it shows that the overall credit growth has slowed to 3.1% in July 2019, which is down from 6% just 3 years ago at the time of the election, and it's one of the slowest paces in 8 years. As interest rates are expected to fall next week to yet again new emergency lows, the problem remains that the banks just aren't lending. It's an issue Scott Morrison spoke about when he was in New York this week at the American Australian Association. Let's have a look at what he said.
One thing we have to be careful of, though, is as important as all of that is, we need our banks to keep lending. You know, we can't be scared of our own shadows in our economy. And this is very important. The animal spirits of our economy and the role of the banking and financial system into extending credit. The role, I think, of a lot of the new financial players in Australia. I mean, capitalism needs to be fueled, and it needs the support of a healthy and vibrant banking sector which can, lean into that. And while it's important to address those conduct issues within the banks, I think we have to be very, very careful, and that can really cut off the opportunities that we would otherwise have.
Now, over the past year, the criteria to qualify for a home loan has become a lot more difficult. Loan assessors now pore over every transaction or withdrawal you make over a 12-month period. So this is a new thing. They now have access to your transactions over a 12-month period. That means everything you buy, whether it's takeaway or if you buy a plane ticket or even clothes you buy, are examined by the banks before they will agree to give you a loan. And this is whether it's a home loan for a new business or even to grow your business or for a renovation. Now, this has paved the way for some morally reprehensible and even discriminatory conduct on behalf of the banks. I've also learnt of a case where a major bank refused to refinance the loan of a woman because she was 6 months pregnant. She hadn't even had the baby yet, but this bank, a major bank, but not one of the big four, they didn't believe that she would be able to repay the loan, even though she told them via her mortgage broker that she was going back to work when the baby was 6 months old. And you have to ask, would a bank dare to deny a loan to a father like this if his partner, if his wife, was 6 months pregnant? Now, Frydenberg says the onus for the ability to repay a loan has shifted too much from the applicant, so from us taking out the loan, to the bank. He says the value of personal responsibility and personal accountability must remain central to our society, and if the pendulum swings too far in the abrogation of these values, then it will inevitably reduce the availability of credit and increase its price. So here's the situation we're in. 8 months on from the Royal Commission into the banking sector, we need to examine the unintended consequences it has had on our economy. And from these two cases, from the comments of the Treasurer, from the comments of the Prime Minister, and from the RBA's own data, it is clear that the bank's overly scrupulous conduct is becoming not only socially unacceptable and bordering on discrimination, but it risks hurting our economy at a time when the Reserve Bank is trying to cut interest rates to stimulate it. Now, I've written more about this in the Daily Telegraph tomorrow, so make sure you read the paper or your equivalent News Corp paper in your state.